I ended the week with a profit of $580. As you see, all my trades were either TP or break even except for the Euro CHF, but I will break down why I ended up taking this trade and how it ended up being a loss. Start off on the daily time frame. We see we have the impulse being all the same color, breaking and closing above previous structure, the retracement also being all the same color, and a minimum of 2 daily candles. We go to the weekly time frame. On the weekly time frame, we will look for an area of resistance or support that could be of influence. As we see right here, this zone that I have drawn up was previous resistance, resistance, resistance. Now it had finally broken that zone, turning into support, and got rejected by this big weekly wick, followed by a bullish engulfing all these candles right here. There we go back to the daily time frame. On the daily time frame, we will draw our Fibonacci in the opposite direction of the retracement to measure the distance of the new impulse. On the 4 hour, we will be looking for a break of the 61 level, followed by a retest to get us into the trade, and then we can ride it all the way to till P. So right here, you see price have broken the 61 level. That means we put our long position on the 61, TP negative 27, and you can either put your stop loss, in this case below the 100, below this structure right here, or on the 88 level. If you adjust your stop loss, that means you will also have to adjust your entry point to create a 1 to 3 risk to reward. Right here you see we already tapped into the trade, and we're waiting on the 38 level to get broken. That is this level right here. That means our stop loss goes from the stop loss point to our entry, and it now becomes a risk-free trade. Let's play it further out, and as you see, TP hit, that was the 1 to 3. Euro CHF. On the daily, we have the impulse, breaking, closing above previous structure, all one color, followed by the retracement, all one color, plus a minimum of 2 daily candles. On the weekly, we draw out our support or resistance level. You see price came to this previously resistance zone, found support, and was followed by a bullish engulfing, indicating that there's possibly more momentum to the upside. On the daily, we draw the fib, as usual, in the opposite direction of the correction. And on the 4 hour, we wait for the break of the 61, followed by a retest. As you see, price had already broken above the 61 level. In this case, you can either choose to put your buy limit order on the 61, wait for the retest to get entered in the trade, or you can wait until price have a deeper correction and then wait for a new break above the 61 to get into the trade. Now the loss you saw, I did enter it initially, so let's play it out. You see right now we are in the trade, but then price hit our stop loss. We just wait until price breaks again above the 61 level, because on the daily you see the setup is still valid. We have the impulse and the correction. In this case, the correction is just a bit deeper than the previous. So let's put our fib back. There we go to the 4. And the daily hasn't closed yet, so we are going to play. Price went deeper. Boom. We wait for the break of the 61. Now we have the break of the 61. That was the initial break. So then we put our long order right here. Let's put our buy limit on the 61. Stop loss at the 88. TP negative 27. And right now we are in the trade. And we also had a break of the 38 level. So our stop loss goes from the stop loss point to our entry to create a risk-free trade. And that was when the TP just got smoked. Next trade is gold. So let's go back to the daily time frame. And on the daily, we will be looking for the setup. Let me just clear this to give you a indication of what the setup was looking like in the first place. So right here, you see we have this impulse breaking this previous structure right here. All same color, followed by the retracement, all same color, and a minimum of 2 daily candles. On the weekly, we look for our resistance or support in this case. And as you can see, gold is at a all-time high. So there wasn't no area of resistance to be a confluence in my bearish trade. So we go to the daily time frame. We draw the fib in the opposite direction of the retracement from the highest to the lowest point of the retracement in this case. And if the trade was a bullish trade, you would take it from the lowest to the highest point. On the 4 hour, we wait for the break of the 61. You see right here, we have the break, but no close. This one also didn't close. This one also didn't close. So boom, now we have the break and the close below the 61. You can either choose to put your level directly on the 61, stop loss at the 88 as usual, and the TP on the negative 27. Or in this case, I didn't put my stop loss or my entry point at the 61 level, because you will usually see that sometime price just have heavy momentum and it won't retest the 61. It will just continue to drop like a knife. So I put my short limit order on the close of this 4 hour candle at 2.65. Let's play it out. See, price just melted directly. It did not come back to retest the 61. So I was right to just put the order right here, got tagged in, break this 38 level, so that means the stop loss can go to break even and we can ride it risk free. In this case, you see price didn't come all the way to my TP area. So I closed out the trade after this close of the green 4 hour candle, because I know there was news coming later that day and I didn't want to be in the trade when there was heavy momentum news coming. And this was a gold trade. So I appreciate y'all for staying with me through this breakdown. See y'all in the future. Peace.